the things you're procrastinating on are actually a really good indicator of what you need to hand off and delegate. So I've been trying to pay a lot of attention to that.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Devin Elder back. Devin, how are you doing today?
Really good, Todd. Excited to be on the show again. Thanks for having me.
Yeah, absolutely. Well, wanted to catch up. I had you on the show. I think it was 2018.
Wow.
And long time ago, man. And so it's been a long time. So, listeners go back, listen to that, but a lot has changed. Devin has been busy. So Devin is the founder and CEO of DJE Texas Management Group, vertically integrated multifamily investment firm based in San Antonio, Texas. And since 2012, the firm has completed hundreds of successful investment projects, which includes full cycle multifamily deals, which is what they're focused on today. And currently they own over 5,000 doors of multifamily. Little fun side note, Devin's a pilot, flies a plane, flies a helicopter. He's also a podcast host and owner of a real estate consulting firm, brokerage, and last but not least, which is the coolest part, the DJE Foundation, which is a nonprofit supporting disadvantaged children in Texas and in the Philippines. So with that said, Devin, man, welcome back to the show. Really appreciate it. If there's anything else I missed, maybe like a quick Cliff Notes version, of course, people that want to really dive in. And I think it'd be fun to go back and listen to your original episode.
Yeah. So, that bio kind of sums it up. We've got the firm today that we do multifamily and some other asset classes. And I feel like we're growing as a company, but I feel like over the last couple of years since I was last on the podcast, I've kind of set all these things in motion with the foundation, with the team, the property management company, some other things. I feel like there was a lot of years there where I was just like starting new businesses and growing and just new things. And now I'm at a point where I'm like, okay, let's mature all these things now. We've got to really, I'm an impatient person, and I'm always starting new things, and I like the energy that creates. But at some point it's like, all right, let's grow some of these companies. And so I finally, like, within the last year, got to a point where I'm like, you know what, I'm 44, life is really good. Let's continue to put good people on the bus and in their positions. Let's set some, aggressive targets across all these entities that I own. And let's just kind of focus on that, making those companies good and better and grow. And so that's kind of a shift from DJE Texas Management Group. It was me. I called it that. It's the initials of my 3 children, and Texas Management Group indicates a team. It was literally just me. It sounded bigger than it was, but now it is, now it is like 80 employees, right? Across 85 employees across all the companies. So really is a group of us going out and doing that. And so my priorities have shifted. And I think some of that just comes with age. I'm 44 and have just kind of settled into this, not striving, trying to make something entrepreneur, but like, all right, I'm a business owner. Let's, that's just kind of it's a different gear. And so that's kind of the focus these days.
Kind of the paradigm shift, right? Before
Totally.
it was, and I get it. Like, I don't know exact words, but you're just like this guy going and doing and doing and doing. And technically you had a business, but you were just doing deals, right? You're just going in.
Right.
And now you're like, whoa, I've created a business. Like, I'm a business owner. Like, let's focus on the systems. Let's focus on the growth. Let's
100%.
that type of thing. I'm right there with you. I think I probably very similar timeline. It was just like, let's go do deals. Let's just do deals. Do. And all of a sudden it's like, okay, what are we building? What are we doing? Like, let's build something.
Why are we doing this?
Right. Why are we doing this?
Yeah.
All that kind of stuff.
Yeah.
So I love that. So what today, what's your kind of main focus? Because before, you were finding the deals, you're the capital raiser,
Sure.
you're everything, right? Now, what is your kind of not purpose, but focus in the company?
Yeah, so I mean, I'm the coach of the team, but I'm also the owner of the team, and I am splitting my time between those two roles. If you kind of think about it as, let's use an NBA analogy. I've really, and it's not a perfect analogy because the coach of the San Antonio Spurs does not shoot one basket. I still
Yeah.
shoot a few baskets here and there,
Yeah.
but I shouldn't be. I will step foot on the court occasionally, but really the play that I need to be coaching the players. But then I'm also an owner, and that in an NBA situation, the owner is not sitting on the sidelines
Yeah.
coaching the players. So
Right.
there's a little bit of bleed in those roles, but I'm focused. I mean, especially for 2023, I kind of told my leadership team, like, I really want to have one meeting a week with each department head, and I'll have some agenda items, and I want to coach you as much as possible to grow in
Mm,
your role, which is that's a big paradigm shift for me, that, and you too, right? As like a solo entrepreneur executor at some point, you probably got really good at executing like really quickly. And that probably led to a lot of early successes. And so now it's this issue for me of what got us here won't get us there. And
yeah.
so what will get us there, and that's our future goals, is just pouring into the leadership team. And then, and they've got to do the same thing for the folks that report to them. So completely different structure than really kind of my dream when I set out, was to have passive income that met and exceeded my bills, and I could lay on the beach. And that does not freaking work for me, man. Like, that is
Right.
just not how my brain is wired. I honestly am happier literally going to work every day. It's
Yeah.
craziest thing. I mean,
I agree.
if you would have told me when I when I was striving to leave my corporate job that, hey, you're going to be right back here, but you're going to own the whole thing, I'd be like, get out of town. There's no freaking way.
Yeah.
And that's just what it's evolved into. I like running these companies. I think there's no better vehicle for personal development than being an entrepreneur and a business owner. And then it's changed for me a lot, like, to being a community participant. We're creating a lot of jobs. We're the foundation, is a beneficiary of our growing company. So then there's this whole, like, philanthropy element to it, that as the companies grow, that grows in
Love it.
direct proportion, which is
Yeah.
really cool. And then my kids are 7, 11, and 13. And, my purpose in life is just to be a role model for them, and not in a here's what you need to do way. Honestly try to tell them anything. They're not listening, but they're watching. They're definitely watching.
They're watching, and and that's the thing. And I've thought about that too. Like, sometimes you have a hard day and you're just like, man, I could just sell everything.
Yeah.
And but then what would you do?
Then what you right.
And then what are your kids seeing? Right?
Right.
They're seeing dad, maybe dad and mom, like doing nothing all day,
Right.
or doing nothing productive, right? They're
Right.
seeing them sit at the beach. They're seeing them travel, which is cool stuff. It's fun to an extent, right?
To an extent. Yeah.
Yeah. And so, like you said, you're being a role model. That's what I think. Like, I'm being a role model to my kids just by doing. They're seeing the hard work ethic. They're seeing that we're trying to build something. They're watching us build it. And we're both of you and I are building it right as they're growing, right? And so they're
Right.
seeing it. And you talked about, before we talked about my son comes in and gives me a hug, and you talked about your daughter coming down and, sitting on the couch with you. And so it's like, they're watching this, they're spending time with us. It's so cool. So all that is awesome. What's the most difficult, or was there difficulty to shifting from being that, like, that the doer, right? For me, the biggest difficult shift is I flipped houses. You flipped houses too.
Oh yeah.
But I
Uh-huh.
was like in and doing the grind, and really just like all on these properties all day, and writing tons of offers, like doing a ton of deals. And then we shifted to not doing nearly as many deals because we're doing bigger deals. And then I'm
Yep.
not doing that same grind. Like that was really difficult for me. Was there any like mm, things that were really challenging for you to make that kind of shift to where you're at right now?
The way I started, and our paths are very similar, right? I started like working the W-2, started doing some burr houses, but always construction projects, right? And then I started flipping houses, and that's how I got my initial capital to get started. But like those first years were so busy. And then even when I got into multifamily, I was still like super busy. I mean, day
Because you
job.
were flipping and doing multifamily and having
Yeah.
your job, right? You're doing it
Yeah. I mean, I
all.
kind of had it all going on for a couple years there, which was, part of me is just wired to do that. I mean, I got my first job like the moment I turned 16. And so
Yeah.
I've always had a job and school or two jobs like my whole life, right? I mean, it was school and bussing tables or school and bartending or college and doing this entrepreneurial thing like my whole life. So I'm like, I like a full day. And so
Right.
having a
Right.
job and flipping houses and getting a multifamily felt like, all right, this is a full life. But then when I think it started a handful of years ago when I started my property management company and started like hiring other people in the company to do some of the, I would call like pretty high level. I never thought I could give away like investor relations. Our head of investor relations has been with us for years now. And he runs he runs it, it's not me like micromanaging him. It's
Yeah.
okay. Hey, he runs that division of the business. And I mean, it took a while to kind of transfer that and make that happen.
Mhm.
But once it did, that was just one example of like, okay, man, I never thought I could like release that part. And our business has grown a ton because of it. And so what other pieces can I start releasing? And so that was the thing, I think, starting the property management company, which was like pretty headcount intensive. And I
Yeah.
brought in a leader to just basically start and run that. And so now it's, there's a leadership team that I'm just trying to coach and look, and it's in their areas of expertise. They are definitely more expert than me. I'm just trying to be the guy with a 30,000-foot view and make sure all the dots connect and that they, have the support they need. But that was the big turning point for me was, I mean, I was busy for years building the real estate company, still running around doing a lot of stuff myself. And, you talk to enough guys that have built big businesses, you listen to enough podcasts, and it all comes down to, what David Osborne has said, you have to work through other people. And, this is not a new concept. You've got Dan Sullivan and Ben Hardy's book, Who Not
Right.
How. It seems to be on everybody's bookshelf. And that concept has been a struggle for me. I mean, just transferring knowledge and skill sets. And it's really my own struggle, right? It's like,
Yeah.
why can't somebody, this is a smart person, why can't they read my mind and execute
Yeah.
exactly like I'm thinking? I mean, come
Yeah.
on. So
That and that right there, what you just said, I think I 100%. And I think a lot of entrepreneurs and then those who are listening are to the probably very similar. Like it's just hard to
right.
give that stuff up. And then we assume that they know what we're thinking, right?
Yes.
And then we get mad when they don't do it right. But we got to look
100.
at ourselves and go, well, yeah, but what did I really tell them? How
Right.
did I really explain this to them? I just said, well, go do this, this, and this. And well, I explained it to them. Well, kind of, but your inside your brain knowledge is way deeper than they are. Now they're going to get there, but they don't know what you're thinking. Like
Right.
it's just, yeah,
Yeah.
I've
That's
made
been
that
my,
mistake so many times.
it's been my biggest struggle. And it
Yeah.
still is. I would say it's like my primary thing that I'm working on in myself. And part of it is, I think for a lot of years, I didn't want to insult somebody's intelligence by really breaking it down.
Mm,
If somebody's like a, brand new hire, or, I had some employees overseas in the Philippines for years, right? And actually we still do, like some of our accounting team and stuff like that. And that you like break things down by necessity. You break it down. I mean, you translate everything. And I felt like I didn't want to treat somebody maybe here in the office, maybe higher education, higher salary, like, God, I want to talk to them like they're five. And so I kind of resisted that. So I'm trying to find that balance where it's like I need to clearly convey what I'm thinking, And
Yeah.
sometimes I do a lot of writing to clarify my own thinking. I mean, a lot of writing before I present it to somebody. And I keep a lot of lists. So like I'll have a weekly meeting with a department leader. And rather than like ping them on Slack when something occurs to me, I just put it in the file, like if it can wait, and let it simmer for that until that meeting comes back around. And a lot of times my thinking has been clarified and I can present them with something that is a little less spontaneous. And now part of that kills me is like the business. It's not idea execution, idea execution, idea execution, which I love, right?
Yeah.
I mean,
Yeah.
it used to be,
Yeah.
and same for you, like idea execute. Man, I think our website should be this. I'm going to go in and change the website. Boom, done. I think our marketing to investors should be this. I'm going to write the copy. Boom, done. That doesn't happen anymore, right? And that's just the nature, I think, in the trade-off of having a bigger company and having a team. So just getting used to that and getting comfortable with that's been a challenge for me. But letting ideas simmer and clarifying them in my own mind before I present it to somebody has, I think, helped with that process.
Yeah. Yeah. That's a good, I like the fact that you're writing things down and doing that. I need to do more of that. I will have an idea and then I'll try to verbalize it to somebody, and that's where things get lost in the translation.
Right.
So really just writing your thoughts down, and I like that, sometimes pausing too.
Super hard for me to do, but it creates
yeah,
it's like an internal check and balance for me.
yeah,
So I'm not, because what I realized was I'm going to give these poor people whiplash because that's how my mind works. It's going a million miles an hour, ideas all the time. Probably most of them shouldn't be implemented, but
yeah,
there's a couple gems in there that might change the company for the
yeah,
better forever. And so you can't discount it, but I kind of let them simmer a little bit. And then hopefully the poor ones die on their own. And I look back at it a few days later and go, I don't know why I'm so glad I didn't send that to my COO. Like, this is garbage. But at the time it sounded, I thought it was brilliant. I'm glad I didn't communicate it to him because he's got a full freaking calendar, a million things to do. And if I toss that over to him, say, go execute this, I just thought of it, it's actually counterproductive because that might be one of those ideas that's going to
100%.
die.
Right.
And it should die. And
Should
so,
die. Yeah.
if something's urgent, dude, I mean, I'm going to call you right now and we're going to hash it out. But seriously, like 95% of the stuff that comes to my mind is not urgent. It could wait a few days,
Yeah. That's it. It's resisting that temptation, right? Because like and most people don't think like us, right?
Right.
And us meaning like entrepreneurs, business owners. Like most
Right.
people don't think that way. Most people just, I think, have more of like a linear type thinking. Like they just don't. And I've made that mistake. Have you made that mistake where you just assume that people think the way you do?
Oh, I mean, constantly. Yeah.
Constantly. It's
Yeah.
just amazing because, like you said, you got this idea, boom, 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 boom. And it's like all these ideas are out there like everywhere. And then if you start spewing it at people, they're just like, whoa, what are we talking about here? Well, I don't know
Right.
what's
Like,
going on. Like, I thought we
yeah.
were doing this and we were going from here to here. Like, but you want us to take like a left and then a right and then a left again and then go up this hill and down. And it's like, oh, what are you doing? I've made
Yes.
that mistake so many times, and I've just assumed that people have the same kind of mentality and mindset of me, and it always is wrong. I'm
Right.
always wrong every
Yeah.
time.
Yeah. Somebody planned out their week. They're looking forward to Friday. They want to kind of punch in and have their stable job. And that's most people. And that's great. Right. That's
Yeah.
totally fine. I think,
Well, we need those people as entrepreneurs because they have,
absolutely.
like, we need to put them in those places like you're talking about. Like, you're hiring the I don't know what you call the person, the CEO or whatever of the management company. You got to hire that person, and you need that linear thinker, right? You want people to have a little bit of imagination, but at the same time, you need somebody that can run that and not be just all over the place. So
Yeah. Yeah. 100%. So I think it's at this point, it's like I've put some things in place to kind of save the company from myself. Right. And one of those things is just filter it through a notepad first. I got all these
Yeah.
categories of notes in on my iPhone and iPad and all that stuff, and put it all there first. And I started doing that, a couple of years ago, and I'm just like astounded by the volume of stuff in there. And then also astounded, little blow to the ego, how much of it is probably not relevant or worth even bringing up to another person.
Just a bunch of garbage.
Just
Yeah.
but it's like, freaking, Rolling Stones has written 1,000 songs and 25 are smash hits, but most of them, yeah, man, you haven't heard of, never heard it,
Yeah.
never went anywhere.
Yeah.
And that's just the
think of
nature
how
of,
many others they thought of that they just didn't even go and do, right?
yeah,
So,
that they didn't even record, right? I mean,
yeah.
it's like they've got their recorded body of work, their hits, which is a tiny portion of it, and then the ideas that never made it to record, which are probably 1,000 times that. So I think that's just the nature of the, being a business owner and creating. And so that's, try not to give the organization whiplash. And one of the things that helps me there is just to set the targets, put everybody in their place. And then now, all right, I'm a coach to how can everybody, kind of excel, which is interesting because that's not a role that I would have like, ooh, I can't wait to do that. I can't wait to be a coach to this leadership team.
Yeah.
But it's evolved to that. And the trade-off is one, all these good benefits, I think, providing jobs and the foundation and our lifestyle is absolutely incredible. And the freedom's absolutely incredible. And then the challenge of it is incredible and the kind of personal growth. So I look at all those things as like, yeah, this is worth doing, and it's worth changing and shifting and getting better for the personal growth, for the lifestyle, for the benefits, all that stuff. It's just different than maybe I would have envisioned it. Because I almost kind of feel like I'm at the full cycle. If you put $100 million in my bank, what would I do? Well, shoot, I'd invest it, right? I mean, live an awesome lifestyle, but I'd invest it. All right. What would you invest in? Well, a lot of real estate. Okay. Who's going to run it? Another operator or a third-party management company? Man, I kind of rather it be my companies that run those things.
Yeah.
So now you're kind of like in a family office situation where it's like $100 million, you put it in my account. What are we going to do? I'm going to run my companies are going to run and grow that capital. Like, I don't know. And we're going to bring on investors to do the same, but like, there's not something I would do drastically different.
Yeah.
If you put $100 million in the bank account, it's
Yeah.
like, we're going to invest in real estate and somebody's got to run it. Might as well be my companies that run it. As long as I'm not like dreading what I'm doing, I mean, that's really important for me as an entrepreneur, is like, I need to be enjoying what I'm doing. Not that you don't have hard days, but like on a regular basis, if there's something I'm doing I don't enjoy, get somebody to do it. And Dan Sullivan's got a good thought about procrastination. He's like, the things you're procrastinating on are actually a really good indicator of what you need to hand off and delegate. So I've been trying to pay a lot of attention to that.
Yeah, that's super great advice. Look at your list. Look at your, to-do list that you do that you hopefully put down every week, or your time blocking or whatever, and what didn't get done and what's on there that was on there last week, and maybe even the week before, maybe even the week before that, like
what keeps getting bumped.
Yeah. And so there's probably some similarities there, and you can go, okay, I really need to get rid of that, because I don't enjoy doing it, and if you don't enjoy doing it, you're not going to do it. You're procrastinating, like you said, and then, man, and you're not going to do it as well either. So
yeah, you're not going to do it well. And then I think for the long-term viability of the company, assuming you want to run and own companies that will be around for a while, it's a threat to the company. If the owner founder is still involved in the company and they're hating it, they're going to leave or sell it or something at some point.
Well, people are going to feel that too, right?
I think so.
Staff is
sure.
definitely going to feel it, like,
for sure.
They know. So yeah, you got to be doing something that you enjoy. And it doesn't have to be exactly what Devin's doing. Like, you don't have to take this coach type role. You could still, if you love investor relations, you can, like, you didn't have to give that up. You could still be doing that. That could be your main thing. Or maybe you love underwriting. Like, that's okay. You probably have some analysts too, but you're still doing some of that. Like, that's fine. Like, you got to continue to do what you love, but you also have to start delegating things to other people to be able to grow the business. What was was there any, I don't know, anything that you did or like moments that helped this like paradigm shift, thinking back from, the Devin that's just grinding and doing every little last thing. And probably, were you at one time like going to the properties and physically doing some of the labor? Did you ever
I
were you ever at that point?
my first rental house, I remember we were there on a weekend trying to fix a clogged sink, and I went with my dad, and I just had this epiphany moment. This is like, like 3 months into my real estate investing
So
career,
this is
right?
like your first paradigm shift, right? You're talking
Yeah, yeah.
about.
It's like I bought a house with hard money,
Yeah.
renovated it, refinanced it, and it worked. And I was like, oh my goodness, this worked, man. I got like $25,000 of equity. I got cash flow.
Love it.
But then the tenant had an issue. I go over there trying to fix a sink, and their house is a mess, and my house, right? But they're renting, and I was like, man, this is not what I want to be doing on a Sunday. And I promised myself right then and there, I was like, I want to own 10 of these, and I can't do this one more time in my life. Like, it's going to cost more dollars, but I'm never doing this again. And it was the same thing with the contracting side. Like, I've literally never swung a hammer on a property, except maybe to like demo some walls for kicks,
Yeah.
with my kids, punch hole in a wall or something, right? Just for fun, if we're doing something silly like that. But kind of from the labor perspective, I just was like, man. And also, like, I'm not the kind of guy that's going to go build a house. I like being outside and doing that kind of stuff, but I've always been more of a finance kind of minded guy. I've always loved numbers and money. That's what I gravitate to. And so the physical side of it, I just never got into. So, have I been burned by contractors because of that? I'm relying on them to do of course, but I never really got into that part of it. One of my first larger multifamily deals was a partnership with another couple that had done some multifamily, and they were like real big on doing the physical work. Like, he would be there on Sunday working a 15-hour day mowing the grass. And I was just like, man, I can't, dude. I mean, that's just to me, with all the books I've read about, efficiency and scale and business books, like, that's a extremely poor use of time.
Yeah. Yeah. Sitting there mowing
Not
the
going to do it.
lawn.
So it's been a process of, having to rely on people for those things. And I think that's actually been good in hindsight, because now I've developed kind of a sense about how to work through other people on that stuff. But I never got caught in that trap of like, man, we got to go to Home Depot and pick up a bunch of tile and, go put some tile down to make, this listing, the pictures are blah, blah, blah. It's like always had to work through other people on that stuff.
Yeah.
And then that's,
I'm guilty. I'm guilty.
oh
of
yeah.
that.
Yeah. I mean, it's common, and probably
Yeah.
because you can, right? Like,
Yeah,
if
I
you
was
told me
good
to
at
tile
it.
this floor, like,
Yeah.
I'm sorry, man, I'm probably not going to do a very good job. I'm probably not the guy. Which I see other things like, man, I designed our website, and I've trained my office manager to she runs it now. But like, how many dozens, hundreds of hours have I spent on web design for my company? Way too many, right? So
Yeah.
maybe that's the parallel of
Yeah. Yeah.
mowing the
There's
lawn.
things that you used to do, right?
Right.
Is there any like, so my original question was this, like, was there any specific things that you've like done, or is it like to change that paradigm? Like, for listeners out there, they've got a certain paradigm right now, and then for them to grow, for them to get to the next level, they got to continue to shift that paradigm. Is there certain
Right.
things like you've done, or habits, or like just like what is it? Anything?
I think there's an exercise that might be helpful to somebody listening, and that's just, in terms of bringing on employees, which is a whole new ballgame, right? I mean, if you're a solopreneur and you have
Yeah.
zero overhead, that's cool to get off the ground and maybe even run that business forever because you have no overhead. And if that's what you want, that's great. If you want to grow a company and have a team, you're going to have to run some ROI examples at some point. And so, you say, we want our company to do X, and that's going to do this in terms of revenue and net worth and stuff like that. And employee costs this plus benefits, and you're basically making, well, the way I think about it is you're making a 90-day bet. So, if somebody makes $5,000 a month, that's $10,000. Somebody makes $10,000 a month as an employee after their benefits and everything. You're going, man, if they came on and they did a pretty good job, what does that do to my company in a year or 3 years? Okay.
Yeah.
What is that? If they work, what does that look like? Okay. That's pretty good if that works out. That's kind of the middle of the road or maybe the upside scenario. Then, okay, well, they cost 10 grand a month. So, well, within 90 days, I'm pretty sure I'm going to know whether or not they're a fit. But I got to make, obviously there's interview and stuff I got to do on the front end. But once they come in, they start getting a paycheck. I'm making a $30,000 bet to get this potential like middle of the road outcome or upside outcome that person could have the impact on the company. And that helps me think about hiring people a lot better, because if you're like, man, I got to hire this person for 120 grand a year.
Yeah, that's big.
Man, that is a big commitment. It's like, that's a whole year of everyone's life. That's a long time.
Yeah.
They're not going to be on for a year before you find out they didn't work. It's going to be 90 days. If they do work, they might be around for years and provide a lot of benefit to the company. So I'd think about it in terms of a 90-day bet. What's 3 months of their salary plus benefits, and go, okay, this employee has a potential to impact the company in this way. If we're able to achieve our goals or get close, and I'm going to make a $30,000 bet or whatever 3 months is on that person for this outcome. And then you just do an ROI, like what's 30,000 divided by the benefit. And it's like, oh dude, the equity multiple on that is like crazy. Like it's one of the best investments you could make. And when I started putting it to paper like that, it's like, shoot, man, I'll make the bet, and sometimes you lose, and that's just kind of cost of doing business. But a lot of times you win, and the company,
the majority of times you win, right?
100%. Yeah.
Yeah. And you might, maybe that person wasn't the fit, but you realize that position was the fit. I've had that before too, where it's like that person maybe isn't the best fit, and we're going to have to find a new person, but that position is definitely the fit. Like we need that position.
Yep.
And I love that, breaking it down, because you're right. It's a little terrifying thinking about paying somebody 100, 120, 150, whatever it is. It's terrifying thinking about that for a year. But if you break it down and say, well, we only have to do this for 90 days. Like, what does that equal? Okay.
Right.
All right. We, 8 grand, 10 grand, whatever it is,
can we risk that?
Can we risk that?
Yeah. And if you can risk it, do it. Yeah. And that simplifies things for me, because we all kind of think in terms of annual salaries, and you're like, whoa, that's terrifying.
Yeah.
But you're only bringing them on to grow or improve the company. And, that's the ROI ought to be there. It has to be there, right? If you're going to be in business.
And usually it is. I feel like usually we're too late to the game. We should have made that decision probably 6 months, or maybe even a year, maybe even a couple of years before that. And we waited, which is fine. Like it just, you learn, but as a business owner, you also are trying to protect your downside too.
Isn't that the truth? Yeah. I feel like every hire was like, why did I wait so long for that? I think part of it is, you're trying to see the future, and that's inherently challenging. And I think some of it too, growing a business is like a confidence issue. It's like, man, I want to look back and call this a win, but like, we don't know what the future is. And we're making a big commitment on payroll. And as soon as you commit more on payroll, you got to commit more on the production side. So, but yeah, I agree. I feel like we historically kind of always been late. That's kind of a conversation we've been having internally, is like, should we get ahead of this hire? And we're starting to think more about that kind of stuff and doing it a little earlier. Yeah.
Yeah. We this year we took our goals and said, here are the goals that we want. And one of those goals is identifying the next positions, the next hires.
Nice.
Who are the next people we're going to hire and bring into our company? And let's put a timeline on that. And now the timeline can still be a little bit flexible, but like, at least we have it in front of us. And so when March 1st hits and we say we're going to hire a person on March 1st, we're already thinking about that. And maybe March 1st happens. We're like, hey, you know what? Let's push that off by 30 days. But it's okay because we at least are thinking about that position. We're deciding this is the next step. I think that's really important to really think about. And I think companies need to get to a point where I do think, and I think you said it earlier. I mean, it's great for companies to have very little overhead
Right.
when you're starting out. And I think that's super smart. I think that's a mistake some companies do make, is that they read a book or they hear a podcast that some people are saying hire people, and then they hire people way too early. And
Right.
then they hire way too many people. And all of a sudden they got all this payroll burden, but they have, no profit.
That'll
And
kill you.
that's a challenge too. So
Sure.
and that's the risk of, being an entrepreneur. We want to grow, but we got to be smart about how we grow. So, but usually, at least in my business, I've been too late to hire almost every single time. So
Right.
every single time.
Right.
All right. Crazy market, right?
Yes.
2023 beginning,
Yes.
2022, obviously the market changed from just white hot, crazy. I mean, deals are going for just wild prices to all of a sudden the market. Now, I wouldn't say we had this big downturn and prices crashed, but just the market feels a lot different. What are you guys doing right now? Is it just kind of, a lot of this build mode of your company, or are you guys still looking at buying? Like, where are you guys at right now? What are you seeing here in the market? Obviously you're in the San Antonio market, so different markets than I am at, but
Yeah. So, this stuff is so directly correlated to rates. So you
yeah,
see rate moves that we haven't seen in 40 years. You're going to see the results that are extremely atypical too. So
yep,
huge rate hikes, aggressive moves on the Fed's part, changes the debt markets. Obviously, that's going to change, multifamily transactions. So what we're doing is we're still going through the motions, right? Had a couple of brokers in our office yesterday for a meeting. Kind of, everybody's kind of the same consensus. Playing a little more golf with some brokers. That's kind of all those guys are doing these days, right? It's just like trying to keep the relationships going. But we are building too. We hired a head of acquisitions, and part of that felt a little counterintuitive. It's like, man, it's a really slow time. Why are you hiring
why are you
somebody
hiring
that's
somebody?
pretty high
Yeah,
caliber?
yeah,
But the thought there is that we can kind of get him in and ramped up to, we would think this is kind of a short-term scenario. If we look historically, we'd hope that at some point over the next 18 months, things start to loosen up. Maybe
yeah,
even, I'm not making any
yeah, right,
predictions,
right, right.
but at some point, things are going to kind of normalize and debt markets stabilize. So we're still looking at stuff. We haven't transacted on a multifamily deal in a while. It's just because mid 2022, things just kind of
Yeah,
stopped. The lot of price discovery this is the same thing everybody's saying, but sellers don't want to give up. And we were getting unsolicited offers a year ago on stuff that was like bonkers,
yeah,
right? And
yeah,
and now it's like, oh, once you tell somebody a high watermark on a price for their asset, like they're never going to let it go. And
yeah,
so unless sellers have to sell, they're not. But there's going to be some have to sellers here at some point because of your variable rate debt, because you're inherently short maturity horizons. So we just don't want to be one of those forced sellers. We want to be a buyer when that stuff comes up. So, we're talking to brokers yesterday. We're touring a property today. We'll make offers where we're okay with them. They're they're low offers, but that's what everybody kind of expects right now. So we're going through the motions. And then really, a couple of years ago, I decided to kind of diversify the firm in some other asset classes. So we've been buying rural land, which is a radically different play. But the way we structure it, creates some revenue for the company that can help keep the lights on. And that really takes the pressure off having to buy another multifamily deal. I mean, if I had my way, we just buy, 2, 3, 4, 500 units a quarter of multifamily and just drop them into the machine with our property management company and just move on down the line and just cycle through them every 2, 3, 4 years, right? The market's not giving that to us. So we're ready. The investors, would love to do another multifamily deal.
yep,
We'd love to do another multifamily deal.
yep,
Stuff's not penciling. So we're just going to continue to go through the motions on that stuff. And then maybe, I call it just like cleaning the garage. You got a slow weekend. Maybe your family's out of town. Man, I haven't had a day like this in a while. I think I'm gonna clean the garage. It needs to get done. I've been busy. So we're kind of cleaning the garage. There's stuff, we moved into a new corporate office. That's been a thing that we're working on last year. There's processes, systems, more
Yeah.
coaching people. Like, let's clean the garage a little bit and get ready for whatever the next phase is. And in the meantime, we're looking at, we're doing our land deals, which kind of gives everybody a little something to do and create some revenue. And then we're also exploring or have started some of these contractor garage type projects. So we've got one that we're building, a couple more that we're looking at, just to create some diversity, and do some different things outside of multifamily, even though I love multifamily. It's just the market's not giving us anything right now. And I think that's relatively short term, but
yeah.
that's
And I
just
think
kind of
that's
kind of
true
how we're
across the
addressing.
board.
Yeah.
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 Well, you said you're talking to these land deals. You're buying raw land. How are you making money on raw land? Are you flipping the land, or are you leasing the cropland, or what are you, mineral
Yep.
rights,
So
or what are you doing?
it's a little bit of that. I mean, we'll get the mineral rights sometimes, but that's I expect $0 out of that. I may get a door knock someday that um I kind of have this, I don't know, this thought that worked so hard over a decade to build this company. And one day, somebody's going to, one of these little dinky mineral rights that I have is going to be worth more than all of it. And through no work, right? That would be
Right.
comical. But that's kind of a side thing. The bottom line is we're buying rural land and subdividing it. And when you do that, you buy 500 acres and then you sell 100-acre tracts. Well, 500-acre deal is, and this is just an example, but that might be a multi-million-dollar purchase, right? Let's say it's a $3, $4, $5 million purchase, cash. That's that's a small buyer pool. So you're kind of in a small buyer pool on the buy side. But then you turn around and you go sell 100-acre tracts. Well, every freaking dad that lives, in a major metro, Dallas, San Antonio, Houston, Austin, can get there on 2 weekends and go shoot a whitetail deer with their sons or go out there with their buddies. They buy 100 acres, they put 20% down with Capital Farm credit. It's a secondary thing. I mean, we got a ranch and we freaking love it. We go there as much as we can. And so once we bought our ranch and we started spending a ton of time out there, and honestly, it's my favorite family time. It just dawned on me that, like, God, there's a lot of guys like me out there that can afford 20% down on 100 acres. And that's a pretty big buyer pool. So the model there is, we're buying at X and we can sell at a decent multiple because it's just a different buyer pool. So it's like a wholesale retail model, right?
Love it.
You're buying a lot of it and selling a little bit of it. And you can mark it up. And so I was explaining this to a buddy of mine over a beer a couple months back. He goes, "Oh, like cocaine." I was like, I'd imagine you buy a lot of it and then you sell a little bit of it at a higher price. Sure, that makes sense. I'm probably not going to put that in any pitch decks or anything, but how about wholesale retail? Let's use that model. But so that's kind of it. I had there's tons of people doing this all over the country, but once we bought our ranch, this is a number of years ago in South Texas, and I got to be friends with the broker. Great guy, has become a good friend. And I'm like, man, can we buy one of these things, chop it up and sell it? And he's like, yep. So we did a few just with my own capital. And then we started showing a few to investors. They liked it. And so now we're off to the races. We're doing a bunch of them. It's been a fun business, totally different than multifamily, like radically different, but it's been a nice, it's been great for the health of the company to have kind of a diverse asset class. And I think it goes back to what you're saying about hiring people. Like, you don't want to go out and hire a bunch of people right when you start. It's all about your phases of your business and your life. When you start out in real estate investing, don't go out and do 10 things. Don't go out and do 2 things. Go do one and have some success and build on that. And I think that's where we're at. We've had success over the years. Let's build on it and create a little diversity because we're at the correct stage for that. Diversity of asset classes is not the thing to do out of the gate, 100%. But at some point, I think it is.
Yeah. No, I would agree with you. I mean, 100%. You've got to focus on that one thing. And I think a lot of people get excited because they hear somebody like you that's got multiple things going on, and they're like, oh, that'd be awesome. I can do that too. And so all
Right.
of a sudden they're buying multifamily, they're buying land deals, they're buying subject to houses, they're whatever, they're buying all these things. And but they wonder why they're spinning their wheels and not making any money. It's because they're not focused, right? You have
Yeah.
systems, processes in
Yeah. I
place for
mean,
your multifamily. You have teams in place for your multifamily. Now you're managing those teams. Now it's a lot easier for you to go out and get into a new asset class because you've already got the machine running over here. Now you're just kind of hitching on a new machine that can run with but independently as well, and this one's just running by itself. Like it's totally different. And so yeah, I think people have to understand you got to focus on the one thing, get the machine running, get it going well, maintain it, make sure it's a system and it's running, and then you can hitch on, right? Then you can move and do something additional.
yeah. And if you're starting, you got to get your reps in. I mean, I flipped 100
Yeah.
freaking houses before I got
Yeah.
into multifamily. Not that one was a requirement for the other, but like
No.
there's undeniable work and pain and lessons in there
Yeah.
that you carry through to the next thing as, intuition, as experience. And I don't think you go from 0 reps to, it's, gym analogy, right? You don't just go in and do the thing that the guy that's been working out for 10 years is doing, right? You
Yep.
really got to get your reps in and build it up. So that's what we've done. And it's been nice to kind of have some different asset classes, but super cautious about it, right? I mean, there's 100 different strategies in real estate, and I ignore just about all of them,
Yep.
right? We got a few that we
Yep.
like.
Love it. Love it. All right, man. Well, we've gone way too long, but this has been awesome. I love the conversation. I asked you this question before.
Okay.
Well, I got 2 questions. I'm going to ask you quick, and then I got to be respectful of John, so I got to get you out of here. But what's a favorite book that you can pass down to our listeners?
So many good ones. It's changed over the years, right? Like stuff that inspired me early on to be an entrepreneur is totally different now than things like business leadership books.
Yeah.
I touched on it earlier, but Dan Sullivan is one of my favorite entrepreneurial
Yeah.
thinkers,
Yep.
strategic coach. I'm not in strategic coach just because of a time constraint we talked about earlier. It's like you can only be in so many masterminds, but his book, Who Not How, and that concept, I think, if you are growing and you are going beyond that solopreneur stage is great. So
Yeah.
that's kind of the one that I would touch on. There's 1,000 more. I'm a big reader, but that's one I would like to, if you haven't read it, check it out.
Love it. Love it. All right. Last question. What are your 3 pillars of wealth creation?
3 pillars of wealth creation. I'm going to give you 2 sets. Set A is I literally have this on slides I've presented to my team. The 3 legs of the stool for our company is industrial land and multifamily assets. And then on the people side, I got a deal guy, I got a money guy, and I got a people guy. And so those are the 3 legs of my company. My COO on operations and people, our head of acquisitions is the deal guy, our head of investor relations, the money guy. And you got to have all 3. You got to have deal, money, and teams to make it all work. Now we've got somebody in place leading each of those things. And those are my pillars of wealth creation.
Love it. Love it. All right, man. Well, really appreciate it. Thanks so much for spending time with us. How can our listeners get in touch with you and learn more about your company?
Yeah. Thanks so much for having me on, Todd. It's awesome to connect again, man. Easiest way is the website, djetexas.com. All kind of good stuff there. Would
Awesome.
love to connect with folks.
Awesome. Again, really appreciate it, man. You have a fantastic rest of the day.
Thanks, Todd. See you soon.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.